Yo, what's up YouTube? Haven't been on camera in a while, mainly just because it takes so much storage and space and yeah, just recording my computer is a lot easier, but here we are. I want to start doing more of these types of videos, just talking to you guys. And in this video, I want to talk about risk sentiment. Now, for those of you who are newer to trading or fundamental analysis or anything besides just technicals, what is risk sentiment? It's basically fear and greed, right? Because certain assets are riskier, and so they appreciate when there's greed or optimism. Certain assets are safe havens, so they appreciate when there is fear in the markets. You know, there's lots of words, risk on, risk off, whatever. They all mean the same thing, right? Greed and fear. Now, what are some of the things I've learned in my last couple years of trading this way, using fundamentals and sentiment and stuff like that? And the first thing I learned is that you should always hit that subscribe button and hit that like button if you enjoyed this video. If you know, you enjoy my content, really helps the channel out. So let's jump right into it. Number one, fear in the markets comes in quicker. So fear is very fast. When markets decline due to fear, depending what asset you're trading, you know, it could be gold, it could be stocks, you know, the S&P, it could be the Japanese yen, it could be Australian dollar, you know, whatever it is you trade, fear and greed play a factor. And I found that fear, and this is a common phrase too, it's not like I'm just a genius, but I've noticed this, that it says markets take the elevator down and the stairs up. And what that means is that basically fear is a stronger emotion than greed. Fear is stronger than optimism, unfortunately. And so when there's fear in the market, people want to sell. You know, people get scared, and that you know, causes people to sell quick and fast and sell a lot. And so when there's fear, markets crash fast and hard. But it's short, right? It's short-lived, so it's fast, but it's short. And optimism, on the other hand, is slower and more gradual, but it lasts longer, right? Something I've found. So you can use that to your advantage when trading, let's say the Japanese yen, and there's a little bit of fear in the market. Let's say it lasts 3 days. You know, a normal person who doesn't know this might think, oh, the markets are fearful right now, I'm going to sell and hold on to it for a month. Well, if overall the thing that's causing the fear, you know, it isn't too scary, you know, you pretty much know the fear is going to be short-lived, and you can look for a bottom a lot quicker than the person who thinks that the fear is going to last a long time. You know, likewise, if you're trading optimism, you know, you can probably hold on a bit longer because it's going to last a while. You know, it's going to last a lot longer than a spurt of fear will, right? So that's lesson number one, is fear is quick, fast. Optimism is slow, but lasts longer. Just think about it. When you're greedy, you think you're invincible. You think when there's optimism, you think good things are going to last. It's going to go on forever, right? And so the trend just lasts a lot longer. And when something bad happens and there's still optimism, it's, hey, you know, things are still going good. You know, we're just going to like brush it aside. And a lot of times bad news gets sort of ignored, which is why it lasts a long time. But when there's fear, you know, even a little bit of good news doesn't really change your mind. It's still, you're scared, right? So that's why I said fear is a stronger emotion. And yeah, so let's move on to tip number two. Tip number two is that price action can help you determine sentiment. You might not think that that's the case, but sentiment is very emotional, right? It's not like you can just read the news and always determine exactly if the market's optimistic or fearful, right? And so you know, what I found is using price action to determine that is important. You know, when there's lots of bad news and the market sells off very sharply, but the bad news isn't too bad, you know, and it shouldn't last a whole long time. And you see the market sort of start to form a base and sort of start heading a little higher. That's when I found is a good time. When the market is starting to show signs of reversal, that is when it's a good time to buy, because then optimism will start growing. Oh, maybe the decline is over. Heads a little bit higher. Oh, I don't want to miss the move. people buy, heads a little higher, you know? So it's a lot of psychology. And but when things are sharply selling off, that's not the time to step in, right? Waiting for a base to form and optimism to start to build is important, right? So using you know, price action that way, you know, so when things are sharply falling, trust me, not too many people are gonna want to buy that, regardless of if there's a technical level in the way. Just wait for price action to confirm that. And you know, likewise the other way, if it's heading higher, don't just sell, right? There's optimism and something's heading higher, don't just blindly sell because it hits a technical area. If the markets are still optimistic, because then it won't mean anything. People are not going to sell super heavily, right? There might be a little bit of profit taking, and then it's just going to keep on heading up. You know, so use price action to your advantage. Don't blindly follow news, and also don't blindly just follow technical analysis. Combine both, get a general gist of what's going on. Now, the last thing, and this one is not always true, but as a general rule, it's good to follow. This last one is that depending on the time of the week can affect how things move in terms of optimism and fear and greed. So what do I mean by that? Well, you're probably not watching this week, but essentially this week on, I think it was Thursday or Wednesday morning, I think Thursday morning, which was yesterday, the market sold off heavily, right? No matter what you were trading, basically there's just overall fear in the general financial markets. And I'm not going to get into specifics, but basically there was a crazy move in bonds, which signaled that there was some fear in the market, which caused a sell-off in all other assets. Right, so this news isn't too crazy, right? It's not like something big happened, like a war or an attack or a pandemic. So this news just caused, I think it's going to be pretty short term. Right? It's going to be some short term fear that eventually the dip will get bought and we'll see another move higher. Now, that happened yesterday morning, which was Thursday. Thursdays, think of yourself as, you know, you got to think of yourself as a big investor, because that's what moves the markets. These big investors, banks, institutions, hedge funds, whatever you want to call it. These guys move the market. And essentially, today, a lot of people were trying to buy the dips. Today's Friday. Lots of people were trying to buy the dip. They thought, okay, you know, buy the dip. It went down yesterday. But, like I said, these principles about time of the week, stuff like that. Fridays, usually people, because, you know, you have with the weekend risk, anything can happen. People don't want to take a lot of risk on Friday. Big guys don't want to jump in on Fridays, especially after a really big red day Thursday. So buying the dip today, maybe not so wise, right? Regardless of the fundamentals, which, yeah, the fundamentals are not too bad. Regardless of the technicals, yeah, there might be a good technical level to buy. Friday is not a good day. People are likely going to be taking risk off into the weekend rather than putting risk on, as in buying the dip, right? So think of it that way. So it'd be wise to instead don't put on too much risk or any risk on Friday, right? Don't buy the dip yet. Wait for Sunday or Monday, right? And so that's why I said Sundays, Mondays, Tuesdays, sometimes Wednesdays. That's when you start to see big moves start to happen, because start of the week, you know, if things are looking good, then they say, okay, it's a new week, things are good, I can put risk on, right? It's Monday, things looking okay, or even Tuesday, things looking okay, let me put some risk on, right? And so, you know, maybe Monday, when things start forming more of a base, is a time to size in more, maybe take a trade, or maybe even Tuesday or Monday night, you know, depending on what you trade. I trade Forex, so, you know, nighttime is when things start moving more. But of course, if you only trade stocks, then it's going to be in the morning. But yeah, so time of the week matters. Mondays, Tuesdays is when things start moving more, right? Sundays, again, very, very start to the week. Usually people don't want to put on too much risk, especially because there's less people trading, less liquidity, more subject to big moves. So, you know, maybe don't trade Sundays. Don't put on a trade Friday either. You know, usually Mondays, Tuesdays, and Wednesdays are good days to put on trades. Sorry for that camera shake. Also, sometimes Thursdays. Essentially those 4 days. Friday is not a good day. You know, people, if they have a good week, don't want to put on trades. They want to take actually trades off, take some profits. So, and Sundays, same thing. Very start to the week. People don't want to put on too much risk. So, Time of the week matters in risk sentiment. Fridays, if there's a big decline Thursday, not a good day to buy the dip. Even if there's a decline, maybe even Wednesday or Thursday, Friday's still probably not a good day to buy the dip. So, you know, just be wary of that. So that's all for this video. If you gain any value, please hit that like button, hit that subscribe button. It helps a lot. And yeah, I'll see you guys in the next one. Let me know in the comments down below if you know, you have something to add, or if you learned some of these lessons the hard way, share some stories, whatever it is, let me know in the comments. I'll see you guys in the next one.
I come from a town where most of the people are so close-minded. They going to school and they working a job, but they don't even like it. I won't be put in a box. Nobody telling me what I should rock. Nobody telling me what I